What's up everybody? In this video, I'm going to be talking about this exact pattern right here that repeats itself pretty much every single day, multiple times. And if you want to figure out the exact way to use this pattern, because this pattern is like really profitable, and I'm going to tell you exactly what to look for and exactly what entries you want to take and the exact take profit strategy that I use in order to make really good money. Now, the strategy is something that I use on a day-to-day basis. I have been repeating this process for basically years now. The strategy is the strategy that I use on a day-to-day basis to generate consistent profits on my account. And this is something that I will touch deeper in the upcoming trading course that I'm doing for the private Discord group. So if that sounds interesting to you, check out the private Discord group. Now, if you look at the private Discord group, I went short at 29450, and you want to see where the price exactly came back to, right? Came back to 29450. So how was I able to catch the exact top with a move downwards, and how was I able to predict this? Well, this is stuff that I'm going to dive deeper into. So make sure you stick around to the end of the video, and remember to check out the private Discord group if you want to follow along with the trades that not only I am taking, but my moderators are taking as well. So to start this off, this pattern right here might strike you guys as a heads and shoulders pattern. And that would be how I used to look at it as well before I understood the concept of liquidity and how the markets like to move. Now, there is a lot to unpack in this simple little diagram right here, but I'm going to try to break it down for you guys as quickly as possible. But again, this is a very technical thing. There are multiple different facets that I'm going to be talking about. Now, what you want to understand about this pattern is that it can be basically summed up into market structure. So whenever you break market structure, for example, currently we're looking at a 1 minute chart, and you want to take a look here at this swing low and that swing low right there. And a swing low is basically defined as the lowest point of the candle simply needs to be, lower than the two candles right next to it. So this right here would be classified as a swing low. For example, over there, the low of that candle is lower than the two candles right next to it. So that's a swing low. So you want to notice how the moment the market breaks structure, notice how I drew a line here, break of structure, BOS stands for break of structure. So the moment you break down, you want to start hunting for an entry. Now, the entry that I would have hunted would be somewhere closer to here, but obviously I missed this entry right here. So the beauty about this pattern right here is that it gives you multiple chances to get back into the entry at a relatively close price. For example, over here, you got another chance to get into it, and I sniped this perfectly. So basically, the first thing that you want to look for with this pattern is you always want to look for a break of structure, right? That means either you break a swing high or you break a swing low. Now, this can be repeated many times throughout the day. And for example, right here, you can see that we exactly got that structure. So currently that was the swing high, and then you break the swing high, and then you come back down, retrace to fill in the order block. And right now, look at where it's at the moment. So this can be repeated very consistently. And this is what I mean by this happens multiple times a day. But this exact pattern is the one that we're going to focus on for this video. So firstly, you want to look for a break of structure. Then you want to look for a FVG. This is basically what you call a fair value gap. Now, this occurs when the moment price breaks a swing low, right? The moment price breaks the swing low, notice how you have a very aggressive move downwards. So in the process, you will notice that there is a gap on the price action where basically in this part right here, there is zero price action, right? Totally zero. It's just blank, absolute blank. So this is something that you want to look for. For example, this right here, the gap between, let me just draw it out. The gap between this candle and that candle right there would be an FVG as well. And the gap between, okay, so that's the other FVG that you would go for if, you failed to get this one. But clearly, this was the one that I went for, and this is the one that it got rejected at. So after you get the breaker structure, you want to look for a fair value gap. The fair value gap is going to be your entry. The moment it enters into the fair value gap, that is your entry. You could set a limit, but the disclaimer here would be if the fair value gap is like really wide, then you're going to want to reduce your risk. And if you want a video on exactly how to manage your risk in a way that ensures that you still make money, because everyone talks about, oh, you should only risk 1% of your account. But then you might be thinking, if I only risk 1% of my account, how am I supposed to make money? If you want to learn exactly how to actually do risk management in the optimal way, then I just made a video, so check it out. But assuming that your fair value gap is bigger, then what you do is it would benefit you to, instead of setting a limit at the entry of the fair value gap, like at the edge of the fair value gap, you want to wait for price to get into the fair value gap, right? And then you want to monitor what price does. Let's say it comes all the way here, then this is your ideal entry, because when you enter into this trade, you enter with the assumption that price is not going to break the previous high. and the previous swing high is over here, which I'm going to touch on later on how to place a stop loss. Basically, right now, the entry parameters is simply 1, you get a breaker structure, and then 2, you go enter into the fair value gap. For example, right here, I'm going to use this example here. Notice when price broke structure over here, price left a fair value gap over here. So notice how if you just entered at the fair value gap, voila, you're in really good profits. Similarly, when price broke structure over here, look for the fair value gap, right? This is going to be the first one, voila. And the confirmation that you have entered into the right trade is after you enter into the fair value gap entry, you either break a low or a high. In this case, it broke a low. It even broke that low. So this is how I knew that this trade was going to play out, and I could just, chill out and I wouldn't have to worry about anything. Now, where do you actually identify these trade setups? Because at the moment, I'm showing you this on the 1 minute chart. How did I know like this pattern would play out the way it did? Where do I start looking for this pattern? And just to clarify, yes, this is the 1 minute chart and your execution time frame should be the 1 minute chart. I wouldn't recommend anything above 2 minutes for this type of setup, even for this one, right? Because it's such a small little move in the price action. For example, if I were to have entered here, then my stop loss would have been 0.09% and my TP, well, even though it's only 0.6%, the risk to reward ratio, which means if let's say I risked 1% of my account on this trade, I would have made 7% on my total account. Assuming you had a $10,000 account, this would have been a $700 trade. So I made a full video on this, on whether or not you can actually make money scalping and how you are supposed to make money scalping. Even though it's just a 0.6% move, you can make really good money with this. If you want to check out that video, I made one as well. So back to the topic. Now that you know the exact setup that you should be hunting for, right? The steps as to what you should be hunting for, we have to figure out how do you actually identify these setups? Like where do you start identifying these setups? For this, I'm going to recommend that you turn on a simple little indicator. So what you want to look up for is indicators. Go search up key levels Spaceman BTC IDWM. So what you want to do is you want to turn that indicator on. So after you turn on that indicator, this is what is going to show up. Now, I'm going to go into the settings to show you what I did to change things a little bit. So currently I have daily, previous high low, previous mid range. I don't have the daily open by default. So if you literally wanted to just copy my settings, this is how you would copy my settings. So weekly, previous high low, previous mid, monthly, open, previous high low, previous mid, and actually that's it. Now, by default, you will have both of these over here, but I find that they are a little bit too high time frame for the specific setup that I'm looking for. Of course, this would be very good levels to base trades off of, but for this strategy in particular, this is the only things that I'm using. Now, the daily high and low and the previous mid-range are very important. This is going to be essentially our bread and butter as to where we start hunting for these setups. So now that you have these settings, I have shorthanded all of the text. So basically, if you were to leave it at default, it would say previous daily high, it would say previous weekly mid-range, it would say previous daily mid-range. But for me, I already know what all of these are, so I just put it as, abbreviations. So now that you have turned on this indicator, the exact thing that you want to look for is you only want to base these trades, right? Where you hunt for these trades. If you want a really objective measure, then you want to hunt for these trades when price gets to either one of these levels. It can be any of one of these levels, because these levels are levels that the market makers, as well as the institutional traders, this is what they use when they are basing their trades off of. Like for example, the previous weekly mid-range, look at how many times the price has got rejected, or just you look at how many reactions you got off that level. And that one is the previous weekly mid-range. Now, the thing, the bread and butter that we're going to use for this setup in particular is going to be the previous daily mid, the previous daily high, and the previous daily low. Now, the objective measure for this is that you only want to start looking for trades using this exact setup, right? This exact breaker structure, right? Breaker structure, and then enter into a fair value gap. You only want to start looking for this exact structure when either you take out a daily high or a previous daily low, or just any key level. It's essentially, right? And what do I mean by take out? It means that if the previous daily low is over here, only when price breaks that level, you hop onto the 1 minute chart and you start looking for this entry, which means that you can, like your higher time frame can essentially be any old time frame, right? It could be the daily. For example, daily, you can still see that the previous daily low is over there. But my recommendation is to not go higher than the 1 hourly chart, because your execution time frame is so low at 1 minute. And if you want to see a video specifically on which time frames to use and how to use each time frame in particular, I'm going to want you to like this video. If this video gets 1,000 likes, I'm going to get that video out within the next week. Moving on, only if a key level has been taken out. Now, in this entry in particular, I actually did not wait for either one of these levels to be taken out because I'm already quite experienced with this method. Again, this is the bread and butter that I use to make money in the market on a very consistent basis. So the way I predicated this trade was on a fair value gap. Now, I want you to look at it this way, right? I'm currently on the 1 hourly chart, and I want you to notice how on the 1 hourly chart, when you broke this structure, right? This is a swing low right here. That is another swing low. When you broke both of these levels, you left behind such a big candle with zero price action, right? I want you to visualize this. There is zero price action from there to there, right? So this entire thing is what is called as an FVG. So when you enter into a fair value gap on a higher time frame, that is also a moment that you can start hunting for this particular setup as well. Because if I were to go back to the 1 hourly and I draw this fair value gap right there, bam, and I hop back onto the 1 minute, and you can see exactly when I started to look for this entry right there. So what you can do is literally just go into the 1 hourly or whatever and set alerts right close to the previous daily high. Right, for example, I'm just going to set an alert there. I'm going to set an alert there, right? So when price reaches either one of these levels, then you will be alerted to start looking for this setup, because this setup is a really, really high probability setup. And this generally tends to give you about 3R up to 15R per trade. And 3R to 15R, right? I want you to visualize this. Assuming you had a $10,000 account, in the matter of a couple of hours, you could be making $1,500 with $10,000 account. So this is powerful stuff. With $1,500, you could do a lot, right? Such as joining the private Discord group in order to get even more gains. Wink, wink. Now that we have covered the entry requirements, like what is exactly the kind of entry that we're going for and exactly where do you start looking for this setup, then now we're going to get into the stop loss placement, right? And this one is going to be relatively straightforward. For example, if I were to have entered there, which I actually did enter there, then you can see that based on the entry that I gave, I said, enter 29450, stop 29570. And now I'm going to dive into that one. And just to give you guys an explanation on things. So 29570 is the swing high right there. My entry was here. So this is relatively straightforward. You simply use the previous stop loss, the previous high, the previous swing high on the 1 minute as your stop loss. Because when you enter into a trade like this, you enter based on a assumption that price is not going to break the previous high. You enter on the assumption that price is going to continue to make lower lows and lower highs until it hits your take profit. So when you enter into this trade, you simply put your stop loss above a previous high because of the assumption. So again, I used this stop loss right here, and honestly, I could have moved it downwards and I could have taken on more risk and my position size could have been bigger and I would have made more money. But it's fine because when I entered into this trade, I was on the 2 minute chart. Again, I said that no higher than the 2 minute, and I was on the 2 minute chart. And at the 2 minute, the closest swing high was here, right? As you can see, this is not a swing high. So it's all right. There is going to be still a little bit of objectivity, even though I am trying to systematize this as much as possible. Remember, if you want to learn how to calculate your risk based on the stop loss and the take profit, then you really want to check out that recent video that I made. You know, that's a lot of gold, and that's going to teach you exactly how to set your risk management so that you actually make money while not losing too much money. So for example, right here, you are going to get another chance, another shot basically at entering. So right here is a bearish order block. So at the moment you just entered into the order block, right? And then the closest swing low, okay, that actually isn't actually a swing low. So the closest swing low is over here. So the moment price breaks that swing low right there, it's going to generally make a fair value gap, right? So you're going to enter back there. I'm going to place my stop here, or even place my stop at the top of here just to be safe, and voila, you know, or maybe even here. Again, when you enter into this trade, you enter based on the presumption that price is not going to break previous highs and it's going to keep making lower highs and lower lows. So another example of a key level. So these key levels does not need to be the previous daily low or the previous daily high. It simply needs to be an area of value that the market makers would want to bring price back to. For example, right here, you left a very big imbalance. So once you take a look at this, right, this is the 1 minute chart, and notice how there is no price action at all in this level. Right? So that is called an imbalance. Imbalances tend to get filled because the market makers need to mitigate their positions. I will cover that very deeply in the trading course. So consider joining the private group. That's where you're going to level up your trading game. So basically, those are the entry parameters and the stop loss. Next, we're going to talk about take profit. Now, this one is a little bit more subjective, right? This one comes down more to experience rather than being able to put it down into a very systematic way. Now, I would love to give you guys a very systematic way, but I'm already trying to explain basically like my trading strategy on a day-to-day basis in the matter of less than 20 minutes. And again, this is just a very short primer, but this short primer is going to help you guys make a lot of money. Now, if this video has been able to help you make money or maybe change your life, then I really want you to reach out to me, right? You can either drop a comment or even better, reach out to me on Twitter at _theartofcrypto. Send me a DM there and I'll be sure to reply back to you. Now, I'm on a mission to impact 1 million lives with trading. I believe the world's a much better place when people are able to trade profitably, because you can do this anytime and you can generate really good money if you know what you're doing. So with this YouTube channel in particular, I'm trying to impact 1 million lives. So in order to quantify that, right, I'm going to use people's testimonials, right? Essentially, if I've changed your life in some way, right, drop a comment or message me on Twitter. It's a way for me to quantify things objectively. So back to the take profit. Now, this one is a little bit more ambiguous because of the fact that you have multiple ways or areas that you can take profit at. So namely, the first way you're going to want to take profit at is going to be at previous swing lows. For example, if you entered into here, you could take profit at that swing low right there. Of course, the reward isn't going to be very much at all because you're taking profit so quickly. So what is the way for me to catch the bigger move, right? And if you notice in this trade right here, I said that my TP was 28,630. Now, this is very advanced because this goes beyond the scope of what this video can teach. If I try and teach that, this video is going to easily go to 40 minutes or something. But the way I identified that TP in particular is from this level right here. Now, I'm on a higher time frame, namely the 1 hourly at the moment. And not only do we have the previous daily low, but we have relatively equal lows on 1, 2, 3 levels. Now, whenever you have relatively equal lows, what tends to happen is that the market makers know that retail, right? Retail basically means you and me. We are going to look at these levels right here as potential support because, oh, look, price has found support on this level so many times. So when price comes back to here, I'm either going to enter into a position with a stop loss right below, or if I'm, let's say, long here, I'm going to place my stop loss right below this level. Either way, there is an abundance of liquidity at this level. Liquidity basically just means everyone placing their stop loss here, or everyone's going to get liquidated once this level is reached. So that's why relatively equal lows and relatively equal highs are very important. Again, this is at a very high level. There is even another thing that I could talk about, which is how do you identify like what's going to happen during the weekends, right? There's a very predictable way to identify what happens, like which direction is things going to move during the weekends based on what happens during Friday. You know, for that concept, right, I'm going to have to credit Dean for this one. Now, he's a moderator in the private Discord group. Again, if you want to learn exactly like, because there's a lot of intricacies to this, but if you want to learn exactly what's that, you're going to want to check out the private Discord group. If I try to cover that now, that's going to take a long time. So back to the take profit. The way I identified it was on a higher time frame. But for you in particular, for you, what I would recommend is for you to, for example, I want you to identify the major swing highs and swing lows. Again, there is no objective way to take profit with this one. This comes down to experience. Now, I'm going to show you like my explanation on why I would say that here, right, first take around 2900 to 200, right? And the way that I explained it to people was I drew a fib from this swing low, right? So I'm going to show it to you. I drew a fib from this swing low to that swing high. Now, I identified that this swing low right here is a major swing low and this right here is the major swing high. I expect this to be the range and everything in between is just micro market structure. This is the major market structure, at least within this range. Now, what you want to do is when you are going short, right? When you're going short, you want to take your profit somewhere close to the 0.5 fib. Notice how price bounced exactly at the 0.5 fib. Now, to justify to explain my thought process behind why I want to take profit at 29200 is because, again, you have many relatively equal lows at these levels. So I assumed that price would be attracted here, and I stand corrected actually. I still think that price is going to target this level, and that is going to be my first take. Of course, I can be wrong, and in trading, there is always a chance that you're wrong. That's why you always manage your risk so that you do not lose substantial amounts of your account if you happen to be wrong. So my recommendation would just be to take your first profit, right? First profit. So that means either 25% of your position or 50% of your position at 0.5 fib. The reason you want to do that is simply because when you are within a range, right? I want you to think of it this way. This is how the market maker algorithms tend to look at things, right? When you are within a certain range, when you are above the 0.5, that is called a premium, right? Price is trading at a premium. And when it is below 0.5, it is trading at a discount. So when you are buying, you want to buy closer to here. When you are selling, you want to sell closer to above 0.5. Now, when you are shorting, for example, over here, I shorted. When you short, when you close your position, what are you doing? You are buying. So I'm buying close to the mid-range, right? And if I want to buy, I'm going to buy closer to a discount. So this level right here is in the discounted zone of the internal range. So when price gets here, I'm going to buy, right? And this is generally just what I recommend for most people out here. This is going to be the thing that works for you. And as for the second take profit, that is going to be very based on experience by that point. If you want to talk about the second take profit, because that is really, really subjective and it comes only from experience and from like proper mentoring. Again, not something I'm going to cover on this video in particular. So if you want to learn everything there is to know about this exact strategy, then check out a private Discord group. But otherwise, I would recommend to just secure all your profit at the 0.5 or somewhere close to below the 0.5. If you do this, you'll find that you will very consistently be able to generate really good profits off of your trading. And if one day, let's say you make really good money, again, just reach out to me, no strings attached. I just want to know that what I'm doing is impacting lives, and I hope this video has been helpful. Now, if you want to take a look at a video where I went basically with an 80% win rate when I was backtesting stuff, you will be able to learn exactly my thought process when I'm trying to trade and basically how I grow accounts quickly. So if you want to check out that video, you're going to want to click on this one right here. For now, may the gains be with you. Stay safe.